You've had a pretty unique path. Big law partner, senior executive at WeWork during its most intense years, now founder of an AI first law firm, which everyone has questions on. Take us back though a bit. How did you end up doing what you're doing today?
It interestingly had been sort of my second or third startup, depending on how you think of it. When I
Okay.
left undergrad, I went to a very small consulting company. I was like the 13th.
Well, let's fast forward to today. That gives us a lot to think about. What does life look like for you right now, personally and professionally? And how are you spending most of your time at Covenant?
I think there will be moments where, you do get into that high gear, right? And so it has to come up and down, right? And so you're working as hard, but not as frenetically.
Welcome back to Growth Under Pressure. I'm Eric Josivits, and today's conversation is one I've been looking forward to. Today, I'm joined by Jen Berrent, founder and CEO of Covenant, an AI native law firm rethinking how legal gets work done for private markets, investors. Jen is also the former chief legal officer and chief operating officer at WeWork, where she helped guide the company through hypergrowth in some of its most challenging moments. Jen, thanks for joining us. It's great to have you.
It's great to see you, Eric. Thanks for having me.
You're welcome. You've had a pretty unique path. Big law partner, senior executive at WeWork during its most intense years, now founder of an AI first law firm, which everyone has questions on in the law industry. Take us back though a bit. How did you end up doing what you're doing today?
Sure. Yeah. No, I mean, I've always really been interested in, I guess, a couple of things personally. One is hard problems. I was definitely nerdy as a kid and nerdy as an adult, and sort of like sort of tackling those sort of things that are challenging, which is what it really attracted me to law, is that it's really hard and thorny and you need good judgment. But I was always fascinated by business and small business. I studied business undergrad and always really wanted to work with entrepreneurs and startups and be in something that was exciting. And so really have tried to, navigate my career to be able to get to the intersection of those two things.
Wow, so it's always been a goal, even starting in law, to merge both legal and business.
That's right. Yeah. I mean, I really, it's funny. I come from a family of entrepreneurs, but they're really not entrepreneurs. They're just small business owners. So, my
Mhm.
father ran a lace business in the garment district. When they didn't have enough money, my grandmother started like a stationery business, and she was, she's amazing. In today's world, my grandmother would be running a Fortune 10 company. She's really unbelievable. My
Wow.
dad ran a small educational business, so like we sort of came from small business. And then I went to business school undergrad, spent a little years in the business world, and went back to law, and always was fascinated by startups and entrepreneurs and sort of creating an ecosystem and, how to do that. But I like doing it in the context of, some hard problems and solving hard things.
So amazing in this capitalist world how you can get your education in one area and pull that into your own business or apply that in a startup. And specifically for you, it was an emerging company, one of the fastest growing companies on the planet. What pulled you into WeWork specifically?
Sure. So it interestingly had been sort of my second or third startup, depending on how you think of it. When I
Okay.
left undergrad, I went to a very small consulting company. I was like the 13th. And then after law school, I actually went to a fintech company that had, a $400 million valuation with like a business plan in the, dot-com era. And then went back, and when I was at a law firm, really engaged, really enjoyed working with entrepreneurs. So I had some amazing companies that I represented, mainly on the company side, when I was a partner at a law firm, but then represented WeWork and really got to know the company and got to know Adam Newman. and was, fascinated by what they were doing and how they were doing it. And so really just became, um, engaged with that company in a different way. What caused me to move was I felt it was a place I could add value because it was deal driven. And as a lawyer, that's what I'm good at, is doing deals and getting deals done. And then I did believe in what the company was doing. I mean, at the time, the mission of the company and changing the way people live and work really resonated with me. And so, felt like that was a place that the company was growing and growing in the right direction, and also where I could grow personally. And both of those were true.
Well, it's definitely, WeWork has absolutely changed the game, and there were others in the past like Regis, right? And Industrious is here in Georgia, and there's some, I know they're in other states, but you have a background in legal, and you also have a background in startups. So, really what you're doing is a lot of operational work, making sure that things are kosher, if you will. So, what is the main difference of, jumping into a startup versus working at a law firm? Is it more of just reviewing agreements, being that sounding board to say, hey, let's stay away from that?
Yeah, so in the lawyer role, going from like outside counsel as a partner to general counsel,
Hmm.
it's a fairly big leap in what your day to day is. And you really go from advisor with expertise on the law and what's possible and risks, and um, being able to confidently and correctly present law, right? And
Hmm.
context for those legal things. The general counsel is really the translator of that legal input from outside counsel or legal knowledge that you own to a business, right? And so one of the most important points is that translation, right? Like, where are risks that we want to take? Where's a litigation that you want? How am I going to structure an agreement so that it can get done fast, but also can get done well? And that, in between is very important because you have to know the business needs, but you also have to know the legal context, right? So one of the
Hmm.
misconceptions is, you have a lawyer and they can just write things down and that makes it okay. And that's not really how it works, right? It might not
Hmm.
withstand regulatory scrutiny or litigation in a commercial context. And so it was a pretty sort of transformative role. The other thing is that you have to be able to, as a general counsel, be broad very quickly. So there are areas of laws that you could have zero expertise on, that you have to know not all of it, but you have to be able to say, okay, in our context, this is what matters. So, for example, unions were something that we had to deal with at WeWork, right? And so I had to understand
Hmm.
the unions in the context of WeWork, not unions overall, for any context, but in that, so that I can make, judgment calls and give advice, and based on our business needs and the legal context.
That's super interesting. So it's safe to say that this role is not only advisory, but also operational. And with a company of that size, I know when you joined them, they were a decent size already, right?
Well, I mean, I was about employee 250. Like, I don't know exactly, but about employee 250, and the
Hmm.
company was worth about $1 billion. So it was not like a 0 to 1, but it wasn't where it landed during my tenure there. So it felt a little later stage when I joined, but it turns out it was really early stage.
Yeah, for sure. And with that being said, I assume there's a lot of legal counsel, outside legal counsel that you had to connect with and guide. And so, like, what does that dynamic look like of taking their input and filtering it, or providing uh the right, guidance to Adam and the rest of the team, versus just leaning on them for guidance?
Yeah, so I would say there are two areas in that. So one was the real estate operations, right? So how do you get the real estate deals done quickly, right? Because that's what it was built on. And honestly, those deals for many, many years were great deals, right? That we were able to expand globally, getting very good terms around the world, and have a cost-effective, standardized practice. And there are two things about that. First of all, um, we just had an amazing legal team. The person who ran real estate law actually runs all of real estate to this day for WeWork, and is arguably the best real estate lawyer in the world at this point. Just from what he's seen. And the general counsel is a former real estate lawyer there, and she's amazing as well. So you had to have deep in-house expertise because that was like an operational part. But
Yeah.
the way I became COO was actually operationalizing that process, right? So how do you take these real estate leases that are going to have terms, everything from are dogs allowed and do you wash the windows to what are the escalations and, can I walk away from the lease, etc. And be able to sort of, get some structure around those negotiations. So there was some predictability, even though different humans, different, so different lawyers around the world are doing that, different, local laws apply. And that streamlining of that system with a gate system and understanding how that impacted operations and how to de-risk and how to have predictability. If I get to this stage, then 50% deals will close. And if I get to this further stage, 80% of deals will close. That's really what we set up early on. That became the backbone of how WeWork operated, and that's actually how I became COO. And so that was one side. The other side is what you're talking about, which is high stakes matters, fundraising, negotiating deals, conflict of interest questions, all of that. And that
Hmm.
really is having amazing outside counsel who I had, just someone who I worked with for many years, and then and not being afraid to sort of, know where to draw a line. You can't draw it too tight, but you have to, be able to explain, and I like to say there was no fraud, $0 of fines, no one's in jail. I mean, we might have burned through a lot of cash or had some, some bad business decisions, but it was just it was all run by the book, very carefully, even on very complicated things. And so that really was a key part of that, you know, lead lawyer job for sure.
Well, bad business decisions come normally in the startup world. It's just, it's natural. If you're not burning cash, then you're not spending investor money the right way. They want to see that. Now, you talked a little bit about the real estate operations. What about just the company operations and the human element? Was that uncharted territory for you?
Oh, sure. Yeah. Yeah. So becoming, going from lawyer to COO was really uh, a new realm. And probably one of the most stressful, transitions I had. And to be honest, one in retrospect, I, wasn't as fun. I had much more fun as general counsel than I did as
Yeah.
COO. So
Yeah, you got to play with a lot more people's emotions in the day to day, and um, it just sounds like you were stretched super thin, which is the startup w world, right? It's wearing multiple hats, but I could only imagine the amount of responsibility you had at that stage. Is there a way that you balance that? Was there a go-to methodology?
no, so there was a zero balance. I would say, during, and I say this a lot, but being a partner at a law firm provides a lot more balance than, being in the thick of, a hyper growth company.
Hmm.
Even the growth probably more than the crisis, but, the crisis as well, right? So,
Yeah,
um, having, that sort of in the WeWork trajectory, the hyper growth, and then a failed IPO, and then rolling right into COVID as an office company, right? So it was
yeah,
sort of, equal parts hyper growth to crisis. Some is there's, early in my career, sort of a senior woman had said, you can have it all, but not all at once. And that's a little bit of how I've lived, is that, as kids have gone through different phases, have I've gone different phases, there's a little bit of all in, pull back, all in, pull back, to try to get some of that balance. On a day-to-day basis, it was really trying to carve out, sort of prioritizing what comes next, a little bit of family, I did meditate a lot, um, or tried to, and
Yeah.
then, some exercise, but yeah, it was not overall not a healthy, lifestyle. It was very adrenaline, a lot of coffee, a lot of wine, on both ends, that try to be a little
Late
healthy.
nights.
Yeah.
What
But
what was your what was your shift? Was it like 5 a.m. to 12 p.m. or 12
yeah,
midnight?
I mean, to be honest, for several years we were working 100-hour weeks. It really was sort of a very difficult, sort of in the lure of WeWork, which is known, is Adam took off for Shabbat. So he would
Okay.
go off on Friday nights to Saturday nights. And we all really took that time, I mean, in a non religious way. So
Sure.
there was sort of this sense of, there was a reprieve, at least once a week, of real downtime, um,
Hmm.
that most people took advantage of. But it was, we were sprinting, we were all in for sure. So, and as I'm
That's
sure,
yeah.
some of these other hyper growth companies are.
Yeah, it's full speed, but that makes it even worse because you got now 6 days to fit 100 hours in.
Oh yeah, yeah. I mean, it was, yeah, it was full speed.
Wow. Well, let's fast forward to today. That gives us a lot to think about. What does life look like for you right now, personally and professionally, and how are you spending most of your time at Covenant?
Yeah. So, at, I would say we're working hard, not at that same pace, a little bit. I think sometimes it's unsustainable. I think there will be moments where you do get into that high gear, right? And so it has to come up and down, right? And so, um but at Covenant, one of the things that we're really focused on is a trust factor. um so building with clients, and so being accessible and not having as much of this sort of typical tech, like, you know move fast and break things, but a little bit more deliberate, because we are going after real legal work with institutional investors that are used to a different level of service and quality. And so in some
Mhm.
ways you're working as hard but not as frenetically, as sort of,
Mhm.
right? It's not just, get something done. You actually have to pause and make sure it's done well, and that you can meet, the demands of clients, for sure. The other thing that is very different is, when I joined WeWork, as I mentioned, it was $1 billion. And then in the first, whatever, 15 months, we went, 5 billion, $10 billion, $15 billion roughly valuation. And then we went higher with, the SoftBank investment. And so it
Mhm.
was that spiraling up. And we see that in AI, especially AI legal, of these, of companies that are sort of spiraling up in valuation. And, um, when you're not in that spiral up, so there's one thing, they have to run so fast to keep up with that valuation
Yeah.
and innovate and hire. We're in this, for durability and sustainability, as a company. I really hope, this is the last company I have, right? Like this is around, for, and ends
Mhm.
up being my longest job, right? So, and so we're really deliberate with that, and that means being very deliberate with spend and growth and fundraising, and, making sure we have the real foundation. When you're not the one front runner, there can only be one or two that are the true front runners, and then everybody else. Now, those front runners don't necessarily win, and they, even if they do win, they're not winner take all. So I know that dynamic, having been, on the WeWork side of it, and but,
Yeah.
and so really trying to be very, very thoughtful about that, and growing in the right way.
That's smart. I have a lot of points that you said that I want to touch on. One of them is the human element, the fact that I mean, I think you guys are in this transition period in law and AI where AI is not quite completely taken over, but people are unsure what's going on. So to provide that human element, you're bridging the gap between the two.
Exactly. Exactly.
A- And so it sounds like you're rolling out the red carpet for your clients. You're making sure that they know that there are humans behind this, but it's AI powered. Is that safe to say?
Yeah, so the way we think about it is that you need lawyers in two ways. You need them in the back end in a few places where um, AI is imperfect and you need quality assurance and you need a check. That that time is shrinking, and we welcome that as models get better. The checking of the models goes down. We use multi models, we use AIs to judge, we use a lot of technology to make that quality assurance. But we also
Hmm.
need lawyers for advice, and sometimes that advice is um, hey, I now looked at what you gave me. I actually have a question, and I don't really want to chat GPT that. I want to ask a lawyer that, right? And so we're there.
Hmm.
And sometimes it is just to make that full experience. Like, I now need to get to closing and you need to negotiate for me. And that human element will never go away. And so we really, try to put that sort of strategic layer on top of a QA layer, so that there is an experience of software. We've had software from the beginning. We have this experience where clients can interact, but it's not just a sort of plug and play and you're left on your own. And then the same thing on the AI. We really use AI for efficiency to go much faster, right? So we built the law firm saying AI exists. How would you build around AI? But also to delight clients. There are parts of AI that clients really should interact with directly. That, either we can just expose to them because we've programmed it so that that AI is really providing them with guidance or information that is better than a human alone can provide. Or there are certain interactions that our clients are okay if it's imperfect, right? So, we have NAS coming in AI, or you have other things, other tools, and we're going to build that more and more. So we're really going to build the advisory and the AI together, right? Like, as it's AI native. So both those things can get better and better at what you do.
That's great. And are you also using AI operationally? I know there's a strong human element, but you also are utilizing all the tools out there? I would assume so, since you are an AI, company.
Exactly. Maybe not all the tools, but yes, I mean everything is, you know, um, there's not a part of the business that we don't think of as AI, and also to be nimble. So we also we're very much buy or build on every single part, right? So
Hmm.
everything from our tech stack has a lot of managed services. We're not recreating databases, and we're leveraging off the
Yeah.
shelf. To honestly, for matter management, we did build our own because we operate so differently than the way a traditional law firm. We're high volume. We don't have
Hmm.
the same conflicts issue because we only have one side of the transaction. But we built that using Coda, because that's like an off the shelf, that's an easy backend, right? So we
Yeah.
really are saying everything should be efficient, and where you can use AI in the back end, of course, we use it, operationally, and
Yeah.
then, you know, use it to do the work as well.
Of course. Well, there's so many tools out there.
Yeah.
Yeah, it wouldn't be smart to not use them. And
Yeah.
for our viewers, tell us a little bit exactly about what Covenant does and the goals.
Sure. So we replace outside counsel, right? So we basically think Big Law is great for elite legal work, and you should go to Big Law for what you consider elite. I think the line of what elite is pretty low, and it's going to just go up as sort of insurgents like us take that. And then there's a
Hmm.
set of work that really could be done without outside counsel, whether it's like a vendor agreement, et cetera, and then just use tech tools for that. But there's a bulk of work in the middle that requires legal expertise, but really because of the somewhat standard nature of the transaction, because of not needing 50 humans, because of that it's sort of there you can have a more programmatic approach, that work can just be done much more efficiently in a different client experience. And so we're focused on private markets, and we represent investors, investing in funds, investing in companies, any sort of investments, and, really are providing them a full service solution to that. So some of it's like 90 something percent automated, and some is less automated. And then over time, we will, because we're seeing repeat, we'll just automate as much as possible. Anything we see, more than, a few times, we try to automate that part of the business.
That's great. On the investment piece and the market side of things, I know you've had a lot of visibility and work in the investment space, whether it's fundraising, working with investors. Is there I try to advise our clients with, you should only raise X amount. I've heard everything from, dilute 15 to 30%, or if you can raise. And then I've also seen the other ones that try to raise just the bare minimum. And, their finance backgrounds. Is there a middle ground, or is there a focus that you would advise to go after, or not raise, or some kind of parameters?
It's funny. I've thought about this, not really. And I've represented a lot of founders in my life. I've probably worked with hundreds of founders. It
Yeah.
depends a little what the founder wants to achieve, right? I mean, you just read about these guys who got, aqua hired by Meta. I think it was Meta, or no, OpenAI, where they, started Forward Healthcare, raised 400 million, it went under, then they
Right.
raised another 100 million, right? Their vision is like go big or go home. And they're okay with it,
Mhm.
right? They just want to do something big, and they'll try it out. And if it doesn't work, and they really feel, excited about that. They're okay that they had $400 million and it didn't work, and now they're on to the next thing. To tell those
Yeah.
guys, raise $2 million until you have an MVP, is they're going to be like, I don't know what you're talking about. I mean, I'd rather not do a business. Then there are other people who don't want to lose someone's money, or really want to create something durable, and it's, they want to be profitable, and, they don't love the fundraising cycle, and for them, they should, raise a lot less. I mean, it's funny. I
Mhm.
was talking to my partner, Richard Paris, and he was saying the the big ticket um, IPOs are all unprofitable companies coming out this year.
Mhm.
And that's unusual. Like the biggest one, Saudi Aramco was like the most profitable company, right? And so, and look, we lived through that in the WeWork era, so when WeWork was trying to go public, at first it was like just have high growth, and then it was like no, be profitable. And so, things change around, and I think different founders have different temperaments and different risk appetites and different, visions of what they want to build. So it's very hard to say,
Yeah.
what the ideal amount is.
Yeah, I would agree. And there's this new thing where founders just want to raise, or not raise, and just bootstrap to 30 to 50 million ARR, and they're profitable from the beginning with a small team. And of course, if you can do it,
Sure.
sounds like a pretty solid lifestyle business. But again, it goes back to your point on what the founder wants.
Exactly.
Um, my advice is always raise what you need, right? I'm sitting on the finance side, so you're going to have to hold yourself accountable to those numbers. You're going to put a forecast in front of an investor and raise $20 million. Well, you better use that money wisely, and if you don't, you're going to have a down round, and we all know what that looks like for a startup.
Exactly. Exactly.
What about Runway? Do you think is it 12 to 24 months, or is it more like, 6 to 12 months with the funds that you raise?
I think it really, again, it depends. I mean, the issue with 12 to 24 months that I have seen is, um, you raise towards the 24-month number, but then you spend to the 12-month number. And and so unless you really are a business that could come out of that with revenue, sometimes in my experience, companies dig themselves in too big of a spend hole, and they would have
Hmm.
rather have saved the money. And if you're not going to have the discipline, or your venture investors will want you to spend fast, it's, in some ways that tightness of runway causes companies to be more strategic with how they spend money, more focused on really building a business, not wasting. And so sometimes that, you know, that discipline actually is very helpful, especially when you're around product market fit, or pre, or just post it, like
Hmm.
um, it, I think it causes people to really crystallize their thinking of how to create a sustainable business.
It's a really good point, because in 24 months, everything could change. User growth could have, 1000x,
Yeah.
and looking back, you would have just diluted unnecessarily.
Yeah.
It sounds like you're running a pretty efficient business. So I'd love to hear that on, being a finance guy. And
Yeah.
and to your earlier point, I'm a nerd as well, and could talk numbers all day. But I do want to get into some of the juicy stuff.
Sure.
You know, on our podcast, we always ask our guests, what was that growth under pressure moment in your career? I know you've been in some of the most visible pressure-filled environments imaginable. Tell me about a time where you were truly under pressure, and bring us into that situation.
Yeah, I mean, I think it's interesting. First of all, I think um, people feel pressure in all different ways, right? So, in my career, I would say, I have felt pressure that when I look back, I'm like, that really wasn't, there was low stakes, but it felt high stakes, and sometimes that high stakes is just your career, So, I remember, being at a law firm and making a mistake and just being like, is this going to like tank my career? That, you're in a situation that might have very little stakes for the company, but is, for yourself feels very high stakes. And I think that's important, like the way people feel pressure. And then some people are in very high stakes for their company, but it's in their sweet spot and don't feel pressure at all, so they were
Hmm.
sort of born for that activity. I have someone who's um I was just talking to him, and he was general counsel of a company that's sort of in crosshairs right now, and um he's like loves it, it's adrenaline, like, because there's not, it's just that this is, I've trained my life, right? So it's the Super Bowl or whatever it is. And so I do think that um that's important. For me, I really do think like, the crime is in the cover up, right? That the issues in the cover up. So in all these situations, whether it was, you know, great news at WeWork or terrible news at WeWork, right? So, we had, we're on the eve of doing a massive funding with SoftBank, and they pulled it, on Christmas Eve, which is sort of in the, out there, or, our IPO gets pulled, or but then on the same, there's an opportunity for, a massive transaction in China or India. There was a lot, or a massive transaction with SoftBank. We raised, a ton of money from them. The clear communication, is important. So to take a breath and basically be able to articulate what's the issue, and what needs to be done, and taking that, that pause, and saying, okay, I need to like wrap my head around what's going, and then I need to articulate it and communicate with who I need to communicate with, and not running from the communication, which sometimes is the hardest part, right? Like it's almost like you get news and you want to, burrow away. You don't want to tell people, or you don't want to say, like, I don't know how to get over this issue to get this deal done, or I don't know how to get over this issue to, communicate that like something bad is going to happen. I think it's just is really, really important, and to not sort of go hide, which is a little, that fight or flight instinct. it's really neither of those, right? It's in that pause and communication and saying, okay, let's figure out, how to wrestle with this pressure moment, I think is the most important.
I love your take on pressure. I feel like you normalize it. You say, look, I've been in so many pressure moments, but this is a part of the job I'm in, and now it's what
That's
is the
right.
response? And I I think that in some industries, to your point, like oil and gas or gambling, some of these others, where the decision making that you do can have just a complete catastrophic impact on the company, investing in an oil rig. And I'm talking about oil because we're watching Landman, if you haven't seen it. Um, so, you invest in some big rig or you try to drill somewhere and invest, tens of hundreds of millions of dollars to drill there, expecting for a return, and it ends up dry. Those are those are the real catastrophic moments, which for a lot of our viewers, they're fast growing small businesses, entrepreneurs, CEOs, and they haven't even gotten to that point yet. So knowing like knowing that there is another threshold above where they're at just puts you into a completely different mindset. It's kind of like this little thing that I'm going through, this little lost client or this little mistake that we made, tomorrow the sun's going to come out and everything is going to be fine. We're going to work through it.
That's right. And I think honestly, when you're small, each vibration feels bigger and smaller, right? So each thing feels, has an outsized impact. Oh my gosh, we're on this trajectory up or on this trajectory down. And, that noise sort of goes out. So it needs bigger movements as you get larger. But, I mean, you really can take any analogy, whether it's oil and gas. I mean, I watch a lot of movies and, you think of these artists and who are filmmakers who spend a lot of time making a movie and then it bombs or, gets, trashed, and that must be heartbreaking for them, right? They were all the way through, and there's really nothing they can do except then start the next one. And so um I think that is sort of a common part of, sort of the human experience is having some failure. To be honest, I don't like it. I don't like failure. And it still makes me stressed and and I care, but you know, it's, I try to, the sports analogy I use for that is like, if you are watching a sport, so like I like tennis, right? And if like everybody
Mhm.
knows at the end of the match that there's no stakes, right? The world is gonna like whichever person wins, like nothing is gonna happen in the world except that person has won. But the
Yeah.
people really care and the fans really care. And if you were watching two professional athletes who didn't care, it would not be interesting at all, right? Like it just, so the part of it is that people are investing and caring. And I think that's the same, especially in a startup, is you can't be indifferent. Like the thing that makes it exciting is you're caring. And then to just sort of temper it on the other side, like it's okay, right? I can care a
Mhm.
lot, but it's actually okay on the other side if it doesn't go well. Um, you know, so and I think that balance is very hard, but that's sort of the sweet spot.
I can't remember the golfer, one of the championship golfers. He's trained his whole life, and he talked about how he had a speech on this where he won the championship. They're celebrating with champagne. This is everything he's worked his whole life for, and he's there in this moment, and he's won. And now, once they're done celebrating, he's got to go figure out dinner. He's,
Exactly.
you know, it's like tomorrow happens, and so that's my point on the caring aspect is you got to really give it your all. There's going to be ups and downs, different emotions, and you really just got to ride the wave. And we actually just had a guy on the podcast. He's the global head of operations and finance for number one app in his space, and he said that they celebrate their failures, which to your point, that's really normalizing failures.
That's really
So I was it kind of shocked me, but it was like, wow, maybe maybe we can do this. But I think the company's goal is to celebrate the failure, so when the next ones happen, it's less of an impact.
Sure, sure.
So that was a big takeaway. Tell me about the transition in your journey. And I'm curious, what's been the biggest from big law to WeWork, or from operator to founder, or building, Covenant in an AI-driven world? And, how do you navigate that shift?
Sure. Yeah. I mean, I would say both were pretty big, going from, you know, outside counsel to general counsel was a pretty big shift in terms of mind shift and pressure and different type of environment. Then moving from general counsel to COO was a very big shift. Sort of changing from sort of a domain expert, a place that I felt fairly comfortable, understood how to do it, and then sort of having this broader, um, more open-ended, nondescript role was pretty difficult. And then
Hmm.
going to founder, each one was different. Um, I like that change. I think you really have to, um, or I think the people that are curious in their careers either sort of are curious, and they go deep and deep and they get the next layer of, where they are if they stay in one place, or, sort of the jumping around, and taking different roles, but, have really come in each with curiosity. Um, I would say for everything, it takes about a year to like even feel like you know what you're doing. And then I'm a big believer in that 10,000 hour rule. Like, it takes
Hmm.
10,000 hours before you really feel comfortable in it. And then what do you do after that 10,000? Like, what's the next phase? And sometimes it meant switching, but sometimes it meant, going to what's the next 10,000 hours? How do you elevate yourself beyond that? But, by the time I decided to do the founder, I'd done a few switches or pivots in my career, whatever, however you want to think about it, but, sort of context switches. And I sort of embraced the not knowing, in Zen, it's like that beginner's mind, right? Like, it's like I came
Yeah.
in it saying, I know I'm not going to know as much, and I'm okay with that, to start. It does cause mistakes, right? But just like anything else, like, but, uh, you know, I sort of like that stretch. I have this quote of, it used to be here, but I sort of had something, painted my wall, but, do one thing every day that scares you, which is, this Eleanor Roosevelt quote. And, there, I always like that as opposed to like, what would you do if you were unafraid? That, sort of there's two framing of the same thing. And like, it's okay to, it's the same thing, like under pressure. It's okay to be scared. It's okay to, not know what you're doing. And in fact, you should embrace that as an opportunity for growth and an opportunity to get better and, expand your own portfolio of life experiences.
There's a concept of fear setting, which is kind of that same quote that Eleanor Roosevelt had, where you go do something uncomfortable, but it can get a little bit extreme where you're like, you go into a Starbucks and lay on the ground, or you go into a restaurant and you scream, or you just do something that puts you in a very, you're not used to doing these things, and it helps you cope with just the normal stresses that come.
Interesting. Yeah. I wouldn't go that far. So to
Yeah,
do it just to do it, I haven't, but to sort of embrace something new as opposed to being static, I have, that's sort of where I fall.
that's good. And you mentioned you have a meditation practice. Tell me, what is that assisting with the switches and just managing the day-to-day responsibilities? Is it meditation? Do you have a checklist? Do you also put together a 90-day plan as someone jumping into a new role? And what's kind of your practice there?
Yeah. So I used to do a much more sort of strict, like sit meditation. Now, honestly, I really make time for a walk a day. Like, I know it sounds crazy, but I walk my dog in the morning. And if I don't walk my dog, I find some other time to do that. And I find that meditative of something less unnatural and more of a natural, like get myself out, do something that I really enjoy doing, get myself moving, and to do that every day. I really try to um, do that so that I have that moment to clear my head at some point. I do block out time, which is funny. People at the company were sort of laughing. I will now, which I used to not do. I have sort of I'm going to work out at this time. I'm going to do this personal thing. I really do put that in the calendar. And I used to not do that. But
That's good.
I can override it, but it really starts every day. There's a couple hours for me to have lunch or have a workout, have this, like it's in there as something that I do. And I really try to do that um, fairly religiously, on a day-to-day basis. And then, if I have to sort of make up hours at some other time, I can do that. In terms of sort of a 90-day plan, I really don't do that. I find it's too far ahead. I'm very into cadence. Like I actually believe like sort of thinking about a daily, weekly, monthly, quarterly cadence of, when are you going to check in? When are you going to, whether it's a team meeting or sales or personally, I think, sort of most high performing institutions have cadence, right? So everything from religious institutions, right? There are weekly, annual traditions in religions, in athletics, in academics, right? And so to really take that myself, right? Both in personally how I live, like what do you do in the fall? What do you do? What's your annual cadence, for the winter and traditions and what can you do to cope? But then really taking that down to weekly, like what do I need to do on a week by week basis? So it's a little less goal setting, like I need to do this in the next quarter, but more sort of setting up the structures so that I know I need to look ahead for this month as something very tactical, as like what do I need to do with current clients and what do I need to do with sales to, something more, sort of, you know, theoretical, something, so.
Yeah, yeah. I really like leaning on cadence. And, there's a lot of people that say meetings are not as effective or they can be time wasters. But if you have a strong cadence and there's a need for it, it
Exactly.
makes perfect sense.
That's right. That's right. That's what I think. And I think sort of having the structure around it. I mean, just to have a meeting doesn't make sense, but to have
Yeah.
like this is the point in time where we're going to think about X, I'm going to think about product or I'm going to think about, metrics. I think that structure really helps people.
Yeah, I'm a huge fan of structure. I just went on a huge rant yesterday about structure for one of our creative guys that's just completely unstructured. So um, trying to bring that to him. Uh, yeah, I'm completely numbers driven, one side of the brain. He's the complete opposite. So let's talk about that for a second. How, just knowing that you've worked with visionary founders and CEOs with powerful personalities, and now you are a founder and you're CEO as well.
Yeah, I am.
So, and now I would assume you're a lot more of the personality type as me, a lot more methodical and structured. Thinking about the people you've worked with and maybe some insights for yourself, how do you keep grandiose CEOs at bay without limiting their creativity?
Yeah, I have found, and I've worked with a lot of amazing, founders and CEOs, and still to this day, who are not me, who are much more sort of that visionary grand plan. Um, you know, most of them, or the ones that that I've really resonated with really actually are driven to by ambition in a good way, right? They have big vision and they want to achieve it. So they're not dreamers. They actually are like, I see this place and I want to get there, right?
Mm,
So I want to have this drug that cures blindness, or I want to build a gambling empire or whatever it is, right? Like I have this thing and I can have this huge vision, but I do want to get there. And most of them at some point know their limitation, right? So if you have vision, right, they're really good at vision and they're really good at execution, right? So I want to get here and now I'm going to go do something, right? So, I want to build a rocket. I'm going to pick up a hammer, right? Or whatever it is.
Hmm.
Not so good at strategy and tactics. And as things get bigger, they understand they want someone to help with that. They want help. They want help with thinking, strategically, what are the strategic alternatives? What are the constraints? What are these? What should I do now? How do I get some, do this? And so, in some ways, it becomes a little bit easier because they are looking for resources to succeed, right? Like those big visionaries
Hmm.
are usually not solo people, right? They are team builders. They are, like how you were saying, like you could have two founders that, get $30 million revenue. They may not have big vision, right? They just may say like, hey, I want to make some money. And like, what's a very narrow thing I can do? If I could do this little thing for someone and I sell it and I make $50 million, like that is awesome. And my big vision is like then I can go, fishing, right? Like, their
Yeah.
vision is not business. And so they might not want your help, right? But the other founders who have these big vision and want to get there, I have found, really welcome the right help, right? Not someone who says, no, not this, but you know, what can I do? What are the guardrails? Can you think, I'm going straight ahead. I need you to think about what's coming around the corner because I don't want to think about that. So you sort of get that out of my way. Or, there's tons of analogies. I'm on the road. I'm going to take this car and I'm going to do full throttle. I see no road. Please pave that road for me because I'm the one driving this car. Like make sure there's a road there. And so that's how I have found. I think you have to buy into the vision and like the vision. To be a good advisor. But yeah, once you do that, I mean, there's nothing more fun than, working with someone with vision who wants to get there.
That's such a great point because if you do have a clashing vision, that's where you destroy the creativity. That's where you go in because then you're building a different road, and they're going full speed on this road. You just put a
Exactly.
fork in the road, that messes everything up. So
Exactly.
that's incredible. This has been really good. I want to ask you a couple rapid fire questions.
Yeah. And then I'm actually at time. So,
Okay.
I have, that's what I was just checking. So I do have something coming
Okay.
up. So yeah, if
Do you want to
you're
end
ready,
with you want to do a quick rapid fire, one answer?
I can do that. I can do that. So
Okay, let me know when you want to start back.
yeah, I'm just sorry.
It's okay.
Okay.
I
Yeah.
Let's do it. All right.
Now,
Okay, let's have a quick rapid fire close. Jen, what's one metric you check every single week without fail?
oh, for the business
Yeah,
transactions. So, what's the usage, and we measure it by transactions.
perfect. And what's one book, podcast, or idea you recommend to most people dealing with pressure or navigating major transitions?
Oh, interesting. Yeah. So, I the main thing I recommend, honestly, is the Checklist Manifesto, by Atul Gawande, and it really provides, a short book in the medical profession, but how to be prepared for crisis, right? So, an expected
Hmm.
crisis, what are the things that you have to go through? To be able to handle that effectively, we've really built that into how we do, our company. But it's a great book, and you can really see how, everyone from, pilots to, surgeons, think about checklists and how to use that structure in being able to, handle the unexpected or the expected unexpected. So,
I want to check it out. I have a couple checklists over here. I'm obsessed with checklists, so it probably would fit very well with me. All right.
oh,
Finish
please
this sentence. Finish this sentence for me. A founder or leader under pressure should always.
communicate.
Excellent. That's perfect. Jen, it was an absolute pleasure speaking with you today. Thank you so much for joining me on the podcast.
Awesome. This was great, Eric. I really appreciate it.
Of course. All right. Thanks. That's it for today's episode of Growth Under Pressure. I'm Eric Josivits from Adapt CFO, and I hope these insights help you tackle your biggest scaling challenges. If you want to help other founders find the show, give us a quick follow or a share. Thanks for listening, and I hope to catch you next time.